Hello, everyone. I'm Barry Corcoran, and this is Financially Speaking. Well, if you're wondering about the Santa Claus rally, didn't get much of a rally this week. Seems to be some disturbance in the stock market. Lawson and I just want to share the last year in review and kind of our expectations for 2025.
Yeah, absolutely. Today is December 20th. We definitely had that sell off earlier this week. A lot of people were concerned about that, but we kind of want to take that into context. Can you remind everybody of where we were entering 2024? I think there was a lot of fears, and that's definitely the biggest lesson that we've learned so far this year is
Yeah.
a lot of those fears never materialized.
Yeah, well, there's always fear, some kind of fear in the stock market, but the expectation at the beginning of the year was that we were going to have a recession and that the Federal Reserve was going to decrease interest rates maybe as many as six times. And we didn't have a recession. The economy is robust, but the Fed did start dropping interest rates. And so it was a very good year for the stock market. Even had positive returns after disastrous 2023 for bond returns. So, all in all, it's actually a good year for stocks and bonds and investing in general.
Yeah, I've actually got some stats here. Uh, Looks like so far this year we had 2.8% growth in GDP in the third quarter. Unemployment remains low, only 4.2%. Added 2.3 million new jobs over the past 12 months. We recently saw that inflation is about 2.7%. That's what the CPI is sitting at right now. All those factors kind of caused the Fed earlier this week to announce, hey, we're going to only cut rates by a quarter of a point. The economy's white hot. This is not where people expected us to be this time of year.
Yeah, it's really interesting that there's kind of always a theme in the stock market that it trades on. And so for the last 18 months, the theme has been the Fed is going to lower interest rates, which is always positive for the stock market. And so the stock market really had a great run this year, anticipating the next 6, 9, 12 months of more Fed rate cuts and the Federal Reserve just kind of communicated, hey, we're going to cut it one more time, but we're going to be really cautious about next year. So it's kind of like you need to get used to where interest rates are. And, and so what we expect is the theme in the stock market to change from so much focus on interest rates to maybe changing to some other theme. There's going to be some other new theme. We don't see that yet, but we'll be talking about something that's very different than just interest rates.
Mhm. And not only were people concerned about rates and expecting a lot of cuts and just growth in the economy coming into the year, but they're also concerned about geopolitical risk, concerned about the election. Talk to us a little bit how that has played out. Things have gone, I think, smoother than people expected.
Yeah, it's a always fears about change in after elections, and so far we're seeing what we normally see historically, regardless of the outcome of elections. And so there's, like I said before, always some fear or concern in the stock market. It just seems to go up the more fears there are. But to be honest with you, we expect some kind of a pullback, a drawdown of the market, for the market to go up 25 or 30%, depending on which sectors of the market. It's not unusual for us to have a pullback, maybe 5 or 10%, which is a correction. So don't be surprised if we see that sometime in the first part of the year. It's normal, it's expected. We see these one or two a year, and for investors, it's actually a healthy change in the market and actually is an opportunity to buy on the dip, if you will.
Yeah, and it's funny when we talk about that, we're actually eager for a downturn in the market sometimes just because we notice things like high PE ratios, some of the highest we've seen in almost 20 years. Things that show us, hey, Stocks are valued incredibly high right now. People are paying a large premium on things that have already grown so much. And so it's going to be healthy to see another downturn. And that's what we saw a little bit of this week. I think a few fears that people are, or uncertainties that people have going into next year is, again, a new presidential administration. We're just seeing a lot of stuff coming down the pike as far as tax changes. We're seeing a lot on tariffs. We're seeing a lot on what's AI going to develop into over the next couple of years.
Right,
I think there's a lot of uncertainty and fear. And I think what we've learned in 2024, just like every other year, is any fears that we have coming into the year may never materialize, you know.
right.
And there's a great quote that we found. It says, "Our worst misfortunes never happen, and most miseries lie in anticipation." So uh, I think that gives us confidence as investors and planners. It's like, hey, when these times of volatility come, we can rest assured that we have a plan. You know, we're going to stick to the plan. We don't have to second guess ourselves because we've been here before. This is normal. Things are going to play out well.
Yeah. Alfred E. Newman said, "Why worry?" So for a lot of you, you don't know who Alfred Newman is, and you have to Google that. But it'll be worth your time to do that. So.
Yeah.
Our expectation with regard to inflation, obviously, what the Fed has done is to increase interest rates to slow the rate of inflation. And I think there's a big expectation that'll continue to level off, maybe reach the Fed level of 2.0. But for sure, we're in a new environment going forward with interest rates higher than they have been over the next 2 or 3 years, and that bonds and stocks play their part together in a diversified portfolio. So I'm pretty optimistic about how that is going to play out over the next few years.
So I think a message that we can send to everybody, and we actually talked to a client this week about this, is when times of volatility come, you can trust in the diversification of your portfolio. You can trust in the planning that you've already done. There's a lot of people out there that panic in times of volatility, and our clients are not those people. You don't have to panic because we've done the hard work. So.
We stay calm.
Yeah,
Yeah.
absolutely. Well, we hope everyone has a very Merry Christmas and hope you can remain calm in times of volatility in the next few months. And we're eager to do some more planning throughout this next year.
And if there's anything that we can do to help you navigate the financial decisions for the next year, please don't hesitate to contact us. I'm Barry Corcoran with Lawson Corcoran. This is December the 20th, 2024. Merry Christmas.